Good morning, everyone, and thank you for joining Sidoti's Micro-Cap Virtual Conference. My name is Michael Matheson. I'll be moderating this morning's session. We're very fortunate to have joining us today the management team from Titan Mining. Before I turn the floor over to them, just a couple housekeeping items. We really encourage questions from everybody. So the way to ask a question is at the ribbon at the bottom of your screen. You'll see a circle with three dots, and it's labeled More. If you click on that, you'll get an opportunity to go into the Q&A box. So just go ahead and do that, and we'll read off the questions at the end. The speaker will leave about 5 or 10 minutes for questions. With that, let me introduce everyone from Titan. We have with us Irina Kuznetsova from IR and Rita Adiani from the CEO. Rita, please go ahead and start.
Great. Thanks for having us here, Michael. Titan Mining Company is a NYSE and Toronto Stock Exchange listed company. There are some forward-looking statements which I'll be making during the course of this presentation. So I would encourage everyone to take a read of our presentation on the first page. I won't go through it in detail. Titan is a US-based company with an established production base in the US, and we really have a dual commodity platform. The first of our two assets is a zinc asset. It's an underground mine in upstate New York, where we have been operating for close to 8 years. It's cash flow positive, fully built out infrastructure, 5,000 ton per day mill. As of today, we employ over 165 people. And we're also one of the largest holders of mineral rights in upstate New York, and we hold about 120,000 acres of mineral rights. On the zinc side, we obviously have expansion opportunities, which I'll go through, but we've also discovered germanium, which is some of you here might be familiar with, is a critical mineral, but one of the more deeply sought critical minerals, largely because it is used in very high value defense applications and on the semiconductor side. And so being a zinc operation, we do see the ability to generate this as a byproduct in the medium term. With respect to our transformational growth opportunity, we discovered a graphite deposit whilst we were looking for zinc and for other polymetallic occurrences within our property boundaries. The project is called the Kilbourne Project, which is about a mile away from the existing ESM mill. So it just goes to show that, the easiest way to find another deposit is really in your own backyard, and we actually did. We took the approach that, given graphite doesn't really have a LME traded price, before we decided to put the project into production, what we really wanted was to make sure that we have buyers for our product, and also obviously the product and the project economics are very robust. To that end, we've completed our initial technical study around the project, which provides some very, very robust numbers, about a $513 million NPV, a 37% post-tax IRR, and a 2.7-year payback. With respect to being, having product available for qualification with customers, as of December 2025, we actually started production on a small scale. And as of now, we are the only domestic producer of natural flake graphite in the United States in over 70 years. I would say that this has only been made possible because of the infrastructure advantages which we have. The facility which we're running for processing of graphite is about 5% of the overall industrial facility which we'll be running, but really puts us in a very unique position because we're the only ones able to supply domestically today, and obviously in the short and medium term. Our targeted production is about 40,000 metric tons, and that will make us a significant supplier and be able to supply, 50% or even more of the domestic natural flake graphite market. The mine that we have on the graphite side, Kilbourne, is significantly underexplored. So we have outlined an initial 13-year mine life, but we believe that this will continue for well beyond 13 years and more likely 20 plus years. So what we've got is a cash flow producing operation and a very transformational growth opportunity, which really provides investors with, significant downside protection, but also leverage really for across the growth platform. A little bit about us in a group. We are part of the Augusta Group of Companies. The Augusta Group of Companies is led by Richard Warkey, who has been a mining entrepreneur for the last 30 years or more. There have been very, very significant successes in the group, as you can see from that slide there, and some outstanding returns. Current companies in the group include Equinox Gold, which has a $12 billion market cap, and Solaris Resources, together with Highlander Silver. Our shareholder register is very tightly held, but we take a lot of pride in it, largely because we're very, very conscious of, issuing equity at the right time for the right transactions. Richard holds about 50% of the current shareholder base. 6% is held by board and management. 7% is held by a large fund out of Chicago called Alyeska, and another 5% by BlackRock. We have about 91 million shares outstanding in basic common shares. In terms of the management team and the board of directors, most of the management team, the key members of the team are actually based out of the US, in upstate New York. And that's myself, VP of Operations, and our head of commercial and sales. We do have a very strong team based out of Canada who support us with respect to all our financing and all our corporate affairs, together with legal. But we're very, very, very privileged to have a board of directors, which not only consists of folks from both sides of the aisle, but folks who've really helped us get to the very special position that we are in, and be able to develop a critical minerals project in upstate New York. The board is led by Richard Warkey, who is the executive chairman, and Donald Taylor, who is the vice chair, who is a very, very experienced exploration geologist who has a history of finding various large-scale deposits across the United States and globally. We have Speaker John Boehner, who was the 53rd Speaker of the U.S. House, as well as Governor George Pataki, both from the Republican side of the aisle. And we have Bill Mulrow, who was Andrew Cuomo's chief of staff on the Democrat side of the aisle, together with Len Boggio, who has great amount of financial and accounting experience. So we see ourselves very well supported by members both from both sides of the aisle, and also, obviously, given this environment, have the right access points into achieving the aims that we set out to achieve for 2026 and beyond. A little bit about drawing from the previous slide about the federal support, which we already have. We became United States EXIM's first ever direct mining loan under the Make More in America program. As we know, US EXIM, which is part of the Commerce Department, has a $130 billion balance sheet, which it provides to various companies effectively for the purposes of financing their projects. We became the first ever mining company that they've supported. So a significant amount of due diligence done, and obviously, underwriting and risk assessment done by the US government on Titan. And we obviously passed that with flying colors. We confirmed that loan at the end of June and have made a drawdown from it. But really, that was the first phase of our engagement with US EXIM, who were very, very interested in supporting us for the Kilbourne Graphite project. They have extended a letter of interest for $120 million, which really will satisfy a significant share of the project's capital, which I'll come to talk about. The $120 million loan is a 12-year facility with 2 years interest only and 10 years repayment. And that really helps us establish very long-term competitive cost of capital for the Kilbourne project as we go into building it, and effectively make it very capital efficient for shareholders given, the small overall size of the capital, but also a significant amount in long-term debt from the US government. A little bit about graphite and why it's so critical. Graphite is 100% imported by the United States, and the United States uses graphite in various applications, but a significant amount in really military applications, as you can see on the right-hand side of the page. It is used in coatings for fighter aircraft wings. It is used in lubricants for battle tanks. It is used in coatings for nozzles for rockets and for artillery. And a lot of this, about 42% of the current input, has actually come from China. And that's where Titan plays a very, very unique role, because 77% of global supply of graphite mining is controlled by China, and 90% of processing is controlled by China. And being the only current domestic producer, I think we found ourselves in a very, very supportive role for key defense industries, key industrial counterparties in the United States, particularly in the face of the geopolitical climate that we're facing today, and with China having the ability to turn on and off export controls as they wish. So we really see ourselves as a unique player, catering to defense and high-tech needs. A little bit about our graphite project, and then I'll come to talk about our zinc operation. The graphite project has a 13-year mine life where we'll be processing about 1.4 million tons per annum, producing about 40,000 metric tons of graphite. And our goal is to be able to deliver up to 50%, if not more, of US demand. The capital to build the project is about $160 million, out of which, as I mentioned, $120 million is very highly likely to be funded by United States Exim. That leaves a very modest requirement from an equity perspective, and obviously that still doesn't take into account the cash flow from our zinc operations. And what that actually gets us is a estimated EBITDA of between $125 to $140 million annually. So this project has a significant profile addition for us in terms of profitability and in terms of being able to, move us to the next phase of our valuation and creating a much bigger company. The project is, as you can see there, just located about a mile away from the existing mill, and it is an open pit project, so very easy to access. And we obviously have a lot of the infrastructure already laid out, but because it is within our existing property boundary, so it benefits from water, power, roads. So it's fairly easy not only to access, but also in terms of bringing it into production. We kind of see a timeline of, within 18 to 24 months. And that is largely because of the infrastructure advantages which we already have at site. Okay. A little bit about our product mix. As I mentioned before, our core industries really are defense and aerospace, which, as we know, have mandates to procure material domestically, and that's micronized and purified graphite for us. We will also begin servicing the battery space with CSPG and purified graphite, and also the industrial space, which is comprises of some of the large refractory makers and foundries effectively used for steel making. And our demonstration plant, which has already started production, is looking to qualify customers within all of these sectors. And we expect that offtakes in respect of these products will, begin to become public over the course of the next few months, as we go here into Q1 and into Q2. As I mentioned, the Kilbourne target and the current plan which we have has a significant amount of upside, where we kind of see this project being is more like a 15 or 20-year project, and even beyond that. As you can see, only about 30% of the exploration trend has actually been drilled. The deposit remains open to the east and to the south below, where the two arrows are. And so we really do see this as a generational asset and an opportunity. Okay. A little bit about our zinc asset. As I mentioned, we've been in operation now for 8 years. We produce about 65 million pounds of zinc annually. Our cash cost is, our all-in sustaining cash cost is about $1.99. And therefore, at current prices, we're making a 45% plus margin. And that really takes us into EBITDA numbers, which I'll come to talk about shortly. There is, as I mentioned, a significant amount of growth opportunity on the zinc side. The current mine life within our zinc operation is 7 years, but it has been 7 years for the last 7 years. So this is a historic district which has been in operation now for close to 100 years, and we see it continuing much into the future ahead. In terms of other opportunities for polymetallic or precious metals within the district, we added the parish target in the middle of last year, which was in 2025. And we will begin to see the drilling data from it later on in this quarter. But it is an IOCG target, so significant potential for gold and copper that we see coming through. So that's much to say that, you know, that we do have existing core assets within zinc and within graphite, but there's a lot more within our existing package, which, you know, remains underexplored. And as we work through it over the coming months, there'll be you know, certain amount of news flow coming out from that. But we're very excited about the district. We're very excited about our current operations, and obviously, you know, being able to generate shareholder value. So really, does our growth trajectory look like? And you know, today we probably have a $25 million EBITDA. The zinc operation is standalone, steady state, so very, very de-risked. And we actually have an offtake contract for a significant part, or almost 100% of our production. So real no risk on the zinc side. On the graphite side, we're looking to add about $125 million of EBITDA. As I said, this is a near-term opportunity, which will really take us up to, you know, $150 million plus EBITDA for very little, you know, additional capital needing to be issued, given that we generate about $25 million of EBITDA from our zinc business. So we see this as a real transformational opportunity for the business. You know, even at current values, we believe we are undervalued. So we see, as we begin to de-risk more and more of the work stream ahead, we see great upside coming through. In terms of what are the next steps for 2026, really, we'll be looking to put out a feasibility study later on this year, and complete our funding package, which is our debt with US Exim and whatever equity requirements which we may have. And we're currently in the process of seeing if there is anything at all really required post the zinc cash flow. The product qualification and offtakes are ongoing, and we expect to hear more on them during the course of the next 2 quarters. Permitting, we expect to complete by the end of this year or very early next year, with going into construction in 2027 and thereafter in production by 2028. So this is a very unique opportunity where we found a deposit, you know, within an existing mining area. We see significant infrastructure advantages, permitting advantages, and really, you know, the beauty of dealing with this project is we have a team with proven execution track record. So I think I'll probably stop there and happy to take questions.
Terrific, Rita. Thank you very much, and congratulations on securing the Exim loan. Quite a few questions from the floor. And before I jump into them, let me just congratulate you, Rita. You blew through our record for the number of attendees at a presentation. You're almost 2x. So there's a lot of interest in what you have to say. Coming to some of the questions, you mentioned offtake agreements, quite a few questions about offtake agreements. Of course, you have to qualify your product with the buyer. Is there any client type where that qualification process would be a little bit shorter in terms of the time frame?
Yep. So, as I mentioned, we have various categories of products such as concentrate, micronized product, purified product, and then CSPG. The path towards qualification and the timelines for qualification for concentrate product and micronized product range from weeks to maybe months. And when I say months, I mean maximum a couple of months, whereas those for purified product and CSPG range, more in the months range. And for CSPG, obviously, it goes out into, even perhaps a year or longer, and much longer. But I think where we're really focused on is the near-term opportunities. So our offtakes on the concentrate side, on the micronized side, should be fairly quick. Our LOIs, MOUs, and offtakes. And then obviously, as we work through the purified material, that we'll be looking to come through as well, probably in Q3 and Q4.
Some other questions about offtakes. With your Ex-Im loan and obviously the backing you have from the U.S. government, is there anything that directs you to kind of select one client type over another? Do you have full control, or is there sort of the government sort of suggesting you might work with defense companies, for example?
I think our preference really is there is no mandate that we've been given as such, but our preference really is, and our uniqueness is being a domestic producer. And I think that's where we're looking to target a significant amount of our volume towards. So we see a lot of flexibility in being able to structure our customer base, but where we see the urgent demand and the pricing pressure really coming from is the defense side, which helps both counterparties as we move forward.
Mhm. Now, again, you have secured an Ex-Im loan. Several of our presenters over the past couple of months are still at the LOI stage. But you have one more, a much larger one that is at the LOI stage. That's the $120 million loan. Is there anything you still need to do, or is it just kind of waiting for the Ex-Im Bank to make a decision?
No, I mean we are actively working with them. I mean, one thing that we mentioned is they've actually given us $5.5 million to complete our feasibility study, and it's the first time they've ever done this for a domestic project. So with us, we are actively engaged with the United States Exim Bank in finalizing the facility, and I expect to have something in due course, probably by the first half of this year effectively, which sets out what the binding conditions are. We don't expect them to be onerous or ones conditions which are not within our control. So that's all to say that, Exim is not just taking a review approach to this. They're very, very actively involved in the project. They've put money forward for the feasibility study. And I think, I can confidently say we are a high priority project for US Exim.
Terrific. Looking ahead a little bit, the graphite project is here and now, and it looks like it's coming along well, but you also have all these acres of mineral rights, including some you recently acquired. Are you planning to use all of them or potentially sell some off and concentrate in some areas versus others?
No, I mean, we like being one of the largest mineral rights owners in upstate New York. I think it's been a labor of love for a number of years to put together that package. And so we see, at least for the coming year, we see 4 to 5 very interesting targets, which we'll continue to drill and develop. Because the beauty of it, Michael, is that, we have an existing mill, we have all the infrastructure. So if we can find additional zinc targets or additional polymetallic targets, we will be able to leverage the existing infrastructure to just make it more profitable at low capex.
Terrific. Um, so just thinking about the impact of your mine opening up, again, the crucial thing, as you've stated, is that you're a domestic producer. So industries like defense would obviously have a preference for you. But with China dominating the market currently as they do, we've seen in other metals, nickel, for example, that they've, perhaps I'm being too candid, but been sort of predatory in their pricing of just lowering prices to shut in other producers. Do you feel you're at risk there with graphite?
So that's always a risk with some of these niche metals, whereas we know China controls 100% of, either processing capacity or a significant part of mining capacity. Um, With China, though, and the approach that they've taken is they have put in place export controls, which is a turn on, turn off effectively. And that may be a function of their own economy and how they're trying to electrify the economy and therefore their own graphite needs. But what that has done, Michael, it's created a very unique situation for us because we are a domestic producer. And so pricing has become less of a factor in discussions with our customers. It still remains a very relevant factor. On the Western cost curve, we kind of sit towards more toward the bottom end of the cost curve as opposed to, the middle or the top. So we're still very cost competitive for a Western producer, be it North America or European producer, and particularly some of the US developers. But more importantly, I think the conversation with our customers has largely been around how can you provide us with a secure supply? And when you say you're going to deliver something, does it mean that you're going to deliver something? And I think that has really helped us in a number of ways by, what I would call China showing its hand. Rather than disrupting our case, because we always believe that you are only going to have a business if you have the right economics around it, and we do believe our project stands up on its own 2 feet and is very cost competitive on a Western cost curve.
Excellent. Um, so sort of looking then toward the medium term, of course, the first priority is opening up the mine, which I understand to be an open pit mine. Would you expect to need to invest in additional refining capacity?
So the refining capacity that we're investing in is part of the $160 million. So it's a very small refining circuit, and that is all included within the CapEx, which I mentioned.
Okay. So speaking of the open pit operation, of course, that's cheaper than digging underground, but there's potential water pollution risks and things like that. Has that all been covered off?
Yep, so that is being assessed as part of the feasibility study. But given that the open pit is really within the perimeter of our existing industrial facility, I think that helps us significantly because it is disturbed land in any case. We're just making use of something that, there was no economic value around and being able to generate revenue for the state, being able to generate jobs. So long as we do things in a sustainable fashion, which we are committed to doing and we have done being a mining operation in upstate New York for the last 8 years, we don't see big risks in that regard.
We've had another question come in from the audience. What are the biggest factors that may impact commissioning in 2027?
I think some of the biggest factors, really, from our perspective, is tariff uncertainty could lead to supply chain disruptions, and most of the equipment that we're looking to sort of solve is really or source is U.S. equipment or coming from Europe. And until recently, Europe was not a problem, but obviously those things seem to change overnight. So we see procurement and being able to get things on time as with any building project. So that's no different. And then I think secondly, with respect to commissioning, um, the de-risking event, which we've already undertaken, is putting up a large scale demonstration facility so that we're able to get on spec equipment, on spec production. And so we hope we're able to carry that through. With any commissioning process, we expect there will be, a few months of effectively fine tuning, as we call it. But we're hoping this will be in the weeks, given that we now have a trained team through our demonstration facility.
So looking at then the process of construction and then beginning mining, do you feel you have enough labor force locally, or will you need to kind of set up a labor camp, bring some people in?
No, I mean, at our mine, we employ all locally. So our objective is to work with, and that's what we do through our community outreach programs. We work with local universities, we have a very large military base called Fort Drum close to us. So we work with all participants of the community to try and, train folks effectively to be able to, partake in the operations. And that's what we've done. And I think that's why it's very unique, Michael, that we're running a, smaller scale, but an existing processing facility. And the folks from there will obviously carry over to the larger facility. In terms of open pit mining, that is mostly earth moving. And we believe that there are, very competent people in upstate New York who can do that very well for us.
Very good. Well, you attracted a lot of interest from our audience. Of course, getting on Fox News the other day must have made your phone ring quite a lot. Where do you see the next few weeks or months, given all this visibility?
I think, we've been going at light speed, and I think now we'll continue going at light speed effectively ahead. But in the next few weeks and months, we should be looking to bed down the Exim facility, progress on our feasibility study, and there'll be more news flow coming out around that. And product qualification and offtake news also coming through. So I think those are the three big project-related developments, together with obviously, steady state information from our zinc operation and exploration results from some of the targets that we're drilling on the zinc side.
Well, terrific. Excellent presentation. We've come to the end of our time, so let me thank you again for joining us, and thank you, audience, for joining us. If there's any of your questions I didn't get to, please contact your Sidoti rep and we'll run down an answer for you. Thanks again for joining us.
Thank
Bye
you
then.
all.